Okay, okay, thank you. And when I discuss, you are free to react, unmute, and just ask. No problem. I'll manage. Right? There's no problem that you need to wait and wait for me to complete. No, nothing like that. Unmute and speak. No issues. I'll handle. Done? You're free to react. But after talking, you can mute so that noise should not be there. But whenever you want to speak, just unmute and talk. So this is the course which we are starting today, and these are the content which I have kept for video. These are the heads which I have discussed in the video. So I don't know whether it will be good if I just share the same thing. I think I have um, just a minute. So yeah, I've used the same thing in my video also. So let me start with the same. So I'm starting with the why this course. So I'll quickly go through what I've discussed. In my video also I've discussed that whenever we talk about decision making, then there are two possible extremes of decision making. When one extreme can be completely based upon gut feel experience. That is also obviously one extreme. On the other hand, the other extreme can be we totally depend upon some mathematical model. Like we have keyed in like decision support system or any other system where we key in some data and we get some output. And our decisions are completely based upon output. These are the two extremes. But in reality, what happened that decision happens somewhere in between these two extremes. Means some input is taken from the model and some inputs are taken from the experience, and then eventually decisions are taken. This type of decision making is known as evidence based decision making. Um, what happened when we talk about decision, it is nowadays, especially when we are having some advancement in computing skills, data analytics skill, you will find that more and more people are relying upon some sort of evidence. It's not that they are not using their experience, but they are clubbing the two and decisions are taken. I have tried to share with you the material in my pre-read on evidence-based decision making, why it is important, how it is relevant in the industry. So when we talk about this course is good. This course is meaningful because this course is going to give you input for this model. This model is the input. So this course will be providing you evidence which can be used for decision making. So this is the relevance of this course, and that's why I would say that this course is important. Let me quickly go through the second part of this discussion, that why this course. Models are the same model. These models are usually of two types. One is deterministic models, and you have got probabilistic or stochastic model. So what happened in deterministic models, things are very systematic, means 2 plus 2 is equal to 4. On the other hand, when we talk about, as I've explained here, when we talk about probabilistic model or stochastic model, this is the situation. We want to find out the association between x and y, but it is not as simple as saying that this is y is equal to alpha plus beta x. What is happening? The thing which is missing is this error term. This term is missing. So what happened? This is uncertain. This is not fixed. What is happening when we are trying to model x and y? This can be estimated. This can be estimated. This is given, but this part, when we say this part is uncertain. So that's why these type of models are known as stochastic models. And the businesses, what happened? Businesses are mostly, especially if I leave the natural sciences, all the other areas you will find some amount of models which are made. They are dependent upon stochastic models. This course, what we are discussing, that is also based upon Stochastic model. So predominantly, we will be discussing in this course to provide evidence for decision making from the stochastic point of view. We'll be developing probabilistic model. We'll mostly will not be developing the deterministic model. Next point is when we say evidence-based decision making and a stochastic model, then there are some learnings which can take place. Means area of study. As you are seeing on the screen, the learning can be statistical learning, machine learning, and artificial intelligence. I'm aware of it that most of you would have heard the term machine learning. I've tried to explain to you the difference between statistical learning, machine learning, and artificial intelligence. And at 11:15, some more material would have been shared with you, which talks about how statistical learning and machine learning are different or how they are similar. The basic point here is both are complementing to each other. It is wrong to say that they are two different things. They are not poles apart, rather they complement each other, and all the good work for some project where information is required, especially predictive analytics, heavily nowadays dependent upon machine learning. But machine learning in isolation cannot work. Rather, a lot of input is coming from the statistical learning. So, if I just give you a brief idea, try to give you some understanding, machine learning is repetition of statistical learning with minimal possible human intervention. So, if I have, here I have explained, this is, so if I just talk about this y and y, as you are finding y cap is there. What is this? That suppose this model, statistical model, would have given you prediction y cap. And on the other hand, what is happening here, as you are finding, this model is giving you again prediction from the machine learning. The difference between these two can be that this is only one model. This is the most optimum, best model. But when we talk about machine learning, what is happening? Many such models are made repetitively. Some new information would, suppose one model would have been made in machine learning, some new information, some new knowledge has come. That knowledge is again put as a, that becomes input, and a new model is made again, some new information is coming. So this cycle goes on and on with the minimal human intervention, and eventually some sort of black box is created. At the end of the day, in machine learning, we do not understand that how many times statistical learning type. If I try to draw an analogy and try to explain to you how it is working, then I can say in machine learning, the statistical learning models are made many times. How many times? None knows, and a black box type situation comes up. But the brighter side of the story is that the output is more. At times it has been found that machine learning outputs are better in terms of having lesser error or and better predictive ability as compared to the statistical learning model. But what is happening, you will be able to understand machine learning output better, how things are working, if you have understanding about the statistical learning. So machine learning in isolation probably may not be able to help you, whereas if you club machine learning with the statistical learning, you will find that it works much better. If I just try to explain this thing, what is happening, machine learning people are undoubtedly better on the IT aspect, because machine learning demands heavy use of computing, not exactly skills, rather the hardware and software support. On the other hand, statistical learning is also nowadays, as I have shared with you, softwares like eView, Stata, SAS, and all. So statistical learning also uses IT, but they need heavier machines, because the one-time operation is repeatedly done. Size of data is very heavy in machine learning. So what happened? The people, those who are specializes in machine learning, or those who are the experts in machine learning, they are predominantly IT oriented. On the other hand, those who are experts in statistical learning, they understand the nitty-gritty of analytics. what is happening? They have less understanding of this modeling part, and they have less understanding of the IT part. So what is happening? The best teams are which are having people of both these streams, people of machine learning as well as people of a statistical learning. Then a very strong team comes up, and that is the idea. When I say that both complement to each other, they are not competing with each other. That is the idea. So if I, so that was the little bit discussion. I have tried to explain slightly in detail in my video the difference between these learnings. We are moving to descriptive, inferential, Bayesian statistics, and econometrics. I'll straight away come to the econometrics part. What is econometrics? Econometrics is basically, as it is explained in the dictionary also, econometrics is nothing but the application of statistical knowledge or statistical learning for the economic or business problems. To solve the economic and business problems, application of statistics can be termed as econometrics. So econometrics is nothing altogether different. Rather, it is application of statistical learning to solve the business and economic problems. That is the idea when I say econometrics. So as I started with why this course, this point I have answered. This course is important because whenever we take decision in business, we need, as I've explained, decisions should be a blend of experience and informed decision making. So in that process, this course is going to be very helpful because this course is going to give you a lot of evidence that can be used for real decision making. So that is the main utility of this course. And I've also tried to explain to you a little difference between these different learnings and what is econometrics. Moving to next point. Anything which you want to ask? Feel free in responding, asking. So coming to the next point, what is econometrics? I've obviously explained as the last point of the previous main point. Moving to next, how financial econometrics is different from econometrics. What happened in case of financial econometrics, the nature of data is different. If I just explain to you, in case of financial econometrics and in case of just econometrics, you will find that the frequency is also, couple of points are there. Like first is frequency. So when we say frequency wise, data which we use in financial econometrics, like share price, we can have daily share price. But in economics, we have a very poor frequency data. I mean, let's talk about GDP or gross domestic savings or savings rate. All these values in economics cannot be calculated. Even calculation of monthly values will be very difficult. So what happened? Frequency is very high, and frequency in economics or data which is economics based is less. So frequency wise, there is a clear cut difference. What happened in economics? The concept which we learn in econometrics cannot be applied on financial econometrics because in financial econometrics, data is having very high frequency. Second differentiation, accuracy. What happened when we say accuracy wise? Financial data is accurate in the way, I mean, share price is clear cut known to you. Sales figures are clear cut known to you. Profits are known to you. But when it comes to economics or application of econometrics, what happens? Calculation of GDP data in itself, even if it is annual data, is very difficult. Similarly, all the data, industrial output, all economical data, you will find that it is very difficult to calculate. So accuracy wise, they are again very good, and they are not that good. If I give you third difference, then noise part means too much of data. You will find that noise is very high. Noise is very high when we talk about financial data. It is very high, but when we talk about economic data, then the noise is not that much. To my understanding,
Hello,
we
sir.
are, yeah.
So I have a doubt. You mentioned that accuracy in the financial data is high.
Yeah.
while in the economic data it's less. So
Yes.
shouldn't it mean that noise is less for accuracy to be high?
Put it this way, measurement accuracy is there. When I say accuracy, I'm talking about measurement. Measuring GDP is very difficult. There are two ways, direct and indirect ways. Again, there are a lot of ambiguities there. But when I say closing price of a share, it is straight away measurement accuracy is there. I hope I've answered your question.
All right, yeah.
So noise, when I'm saying what is happening, that too much data. I mean, it's like too much knowledge or information which is available in case of financial econometrics or financial data. But that's not the case in economics because you have got one annual figure of GDP, one annual figure of, let's say, population. So these figures are not that noisy. So accuracy and noise, they are used in different context. So, I mean,
Okay.
to my mind, yeah, to my mind, these three differences are good enough. What happened just because of these three things? And the utility is also different. We are talking about when we talk about financial econometrics, we are more towards corporate. And when we talk about econometrics, we are more towards economy. So here the perspective is when we talk about econometrics, perspective is slightly macro. On the other hand, when we talk about financial econometrics, perspective is little micro for corporate. So these are the broad difference between financial econometrics and econometrics. So what happened? The understanding, concept, everything which are applicable for econometrics may not be of much use for financial econometrics. Or if I put it that way, that the basic concepts remain same, but when it comes to application of econometrics concept for financial econometrics, we have to refine it. We have to adapt those concepts which are meaningful for financial econometrics. So as we go through the course, you will realize the same regression analysis when it is used here, it is used slightly differently. But when we use same regression analysis concept, then we have to tailor-made, customize those regression analysis concept which suit for data which are more relevant for financial econometrics. As we go through the course, you will realize, you will understand. So for timing, this much is enough for this difference. You have any question, please feel free to ask. So coming back to the next point, steps in handling econometric problem. Um, these are the steps which we usually say, but there is nothing hard and fast. These are only suggestive steps which we are supposed to follow. In the beginning, it is good to understand like that, but when it comes to practically applying it, then we'll be applying the way we want. So order is also not that rigid that you have to strictly follow this order. Let me explain to you quickly. In a corporate world or in business world, you will find some problem is there, and you want to solve the problem. So problem can be solved differently by different people. If I'm trying to handle the problem, I might visualize a different solution. If you are there and you want to solve a problem, probably you may want to solve in a different manner. Let me explain to you with the help of some work so that you have slightly better understanding. Same I have done when I have explained to you in video. Look at this published work. This work is application of financial econometrics to talk about how dividend policy should be there. What should be the appropriate determinants of dividend policy in India? I'll show you the model straight away without wasting much time. If you look at this, this is the model. This is the independent. I mean, these are the factors which are in vector form. Don't you worry. Right now, just to understand that dividend is dependent upon certain variables. If I just show you, this can be the good list for variables. What you are finding it here, point, please try to understand the point. I have, just because I wanted to solve the problem of dividend distribution is a very big problem. You will understand gradually in your financial management course that dividend distribution is a big problem. So on what basis dividend should be increased, dividend should be reduced, or it should remain same as it was last year? There are many factors which are involved. Suppose this is the problem for a particular company, that how much dividend should be given. What are the determinants of the dividend distribution? The company corporate wants to know. Suppose I have been asked to solve this problem, then I have visualized that the dividends, this is divided by total assets. This is one of the variable which have been created as dependent variable, the variable on which I would like to study the impact of other determinants. And just because I wanted to solve the problem, I have decided that I will be studying the dividend determinants, keeping these three things in mind: operating measures, debt measures, and there are some summary measures. Operating measures are those which are related with the day-to-day operation of the company. When I say debt measures, how much is the loan part in the capital of the company? When I say summary measures, it is slightly, if you look at return on capital, return on investment, or growth measures, liquidity measures. So these are clubbed as summary measures. Right now, it is enough to understand this much, that I have decided that I would be solving the problem of dividend distribution using these three variables: operational, debt, and some summary measures which are related to profitability of the firm. And then this is the model. I'll come back to the, or I'll quickly, I can show you one more model, another published work. I'll show you the model. I'm just interested in showing you the model. Look at this. This is another problem, though it is not finance, but it makes sense to you to understand the concept of how the model is decided. I mean, model. Right now, what we are saying, a problem is there. So what is the problem in this case? That there is a hospital which is going to start, super specialty hospital in a non-metro city. What they are saying, that how to have a better perception about the hospital. They want to have better perception, perceived expectation of hospital. That is the output which the client was looking forward to, and it was a consulting assignment for me. So what happened? This is the output which the client is looking forward to. And just because I wanted to model it, I modeled it in this way. What I'm saying, that this is dependent upon medical facilities available at the hospital. So you want better perception, so you have to have good medical facility at the hospital. But this is not the end of the day. Rather, I added two more things. I said positive word of mouth. WM is nothing but word of mouth. I said if you have positive word of mouth, then the impact of good medical facility will be mediated. Means the impact of transferring of the effect of good medical facility on positive perception will be carried much more easily with the help of positive word of mouth. So this effect will be transferred much more easily. This is mediation. And I have added one more variable which I am calling AC. AC stands for access and cost. Means how easy it is to approach to the hospital in terms of physical reach to the hospital. And C stands for cost, access and cost. So what I'm saying, AC is moderating. It is either reducing the transfer of medical facility to perceived expectation, either it is increasing or decreasing. So it is moderating the impact. So in a nutshell, I can say the effect of good medical facility on the positive perception is, if I say that positive perception, then I'll say that good medical facility along with the positive word of mouth and access and cost would in toto help the hospital to have a positive perception, and so more business. So I'm just again trying to relate things. This is my approach to solve the problem. Somebody else would have come, he would have solved the problem differently, same output, but this model structure would have been different if somebody else is trying to address the problem. So that is the second step in an econometric problem. We have a problem, we want to solve a problem with the help of some model. That is second stage, second step. Third is to solve or to understand whether model is good, bad, or whatever it is. We collect the data. That is step 3. Then we run the data with the help of some software. We test the model which has been made here, like here or here. The model which has been made, model is going to be tested. And then we'll be coming to step 5, where we will be able to decide as we go through the model whether the model is appropriate. We call it significant. Right now, it doesn't have to say whether the model is appropriate or not. If model is appropriate, then model will be put to use. And if it is not appropriate, then we'll go back to the step 2 and we'll change the model to solve the problem. And this is the, I can say, a rough idea about how problems are solved in econometrics or in financial econometrics for that matter. Any question? So, yeah. Okay. So, these are the points of discussion. We are through with the steps in handling econometric problems. So this is what I have shared with you, that these are the steps which are usually followed. Maybe not in that sequence, but broadly these are the steps which are usually employed to solve a problem using financial econometrics or econometrics. Next is software and books for the course. I think CRs would have helped you to have book as well as software. We are not using SaaS, but we'll be using eViews and Stata. I'll show you glimpse. I'll give you right away. And this is again very evergreen, famous book, Basic Econometrics. But this is again a book of econometrics. I'll be preferring a book on financial econometrics, so I'll be using Chris Books. I think that you would have facilitated the book through your CRs. So that is the idea. Plan of the course. I'll show you the plan of the course. What I have done in this course, I have divided the whole syllabus into 5 broad topics. These are the 5 broad topics: regression, forecasting, long-term association, volatility models, and parallel models. As we move on with the course, you will understand the meaning of parallel data, time series, cross-sectional. Right now, I don't want to waste time. As we reach to the topic, I'll explain the difference. So these are the broad 5 topics, and I have divided it into 12 subtopics. Regression will be covered into 3, forecasting these 2, like that. These are the components of evaluation. N-term is 40 marks and the 3 components are 20 marks. I have planned in such a way that after 2 topics, when these 2 topics are over, we'll have first component. And as these topics are over, we'll have the second component, midterm examination, and then third component, which will cover these top subtopics, and last will predominantly cover these last 3 topics. But interim exam will be having some spillover from these areas also. This may be the syllabus dominated by this portion. Some idea about the assignment and project, I'll explain to you when I reach there after the end of these 2 topics. Any questions?
No, sir. No, sir.
So, right. So here we have come to the this introductory discussion on financial econometrics. This is what I have discussed in my video. So now we move on to the other parts. So no questions. So if you have no questions, then I'll show you something about software part. Have you opened the software? Any one of you used anything on software? You want to post?
Yes.
You want to, in chat box also you can use. If you want to say something. Any one of you have opened the software?
Not
Yes, sir, we
used,
have
just
opened it,
downloaded.
but not used it, sir.
Anyone has got any experience of using any of these 2 softwares, Stata or eViews? Any one of you?
No, sir.
Okay, I'll show you. So first I'll show you eViews and then I'll show you Stata. Acha, I've shared with you, I think yesterday it was shared with you a caselet, Fitness First. All of you have got access to that caselet?
Yes, sir.
So this caselet was shared and you have got this data also. This. This data is available with all of you. All of you have got access to this data set.
Yes, sir.
Yes, sir.
Right. So as you open eViews, you will find this window will come up. You want to try on your laptop, you can, or you can wait for this session to get over. All these are getting recorded, so you will have access to this again. So you can just have a look, and later on you can try yourself. So go to File, New, and you can create. When you are starting something first time, any views, go for work file. Otherwise, suppose I have old file, then I can open the file. So right now I'm just creating a new work file. This will come up. On the left side, you are finding some options are given. So we'll opt for the easiest option, unstructured, undated, keeping things simple. Observations, if you look at Excel, then the observations are 10. Have you read this caselet? Yes or no?
Yes.
Yes, sir.
Yes, sir.
If you have not read, I can give you 2-3 minutes to go through it quickly. Will it be okay if I wait, or shall I start?
Fine, I think it's fine.
Those who have not gone through the case, please go through quickly. I'll wait for 2-3 minutes. Anyone has got any problem, you can share on chat box. You can put your question on chat. At the end of this caselet, it's a very small caselet. You are having data here also, just to explain that what are the data. So I have put it here as well. And then we have got these two questions. Question is, we have to develop a model. So we'll address probably this in the next session, but nothing wrong to start with. Coming back to eViews. So as you are looking at this data, there are 10 observations. So taking the input from the availability of data, I'll be asking for only a worksheet with 10 observations. It is important. And you can give some name. Let's say I give a name demo 1, and I can have it. You want to save it somewhere, you can again save as wherever you want to save, in whichever directory. That can also be done. So this is the initial step to open eViews. Now, next step, how to enter the data. So to that, there are many ways, obviously. I follow this. I suggest you, when I studied around 15-16 years back, this software, I was taught that way. So I still prefer that simple way of entering the data in eViews. I'll show you again. Go to Quick. In Quick, you will find empty group edit series, and this will come up. As you go here, click here, and you take the cursor one step ahead, so that this whole thing. So as you're finding that these are the 10 observations, and this row is used for giving the name of the variable. So default will not be this. I'll again show you. Let me delete. Yes. Quick empty group. Default is not that. Default, to open that name row, you need to click here, and then it will be open. Go back to Excel, just simply copy it. Don't do anything. CL number you can avoid, because eViews automatically will have CL number idea. You want, you can have, either ways it is okay. I've just copied this data. I have simply saved it, pasted it here. I need not do anything else. I can close this. It will ask for delete the group. I'm not interested in group. I use this empty group facility to key in the data in eViews. Just go for yes. So as you look at here, earlier we had these two things, C and reset. C is constant, reset is the residual. You will understand gradually what why they are there, what is the utility. But we have entered these three data. If you have gone through the caselet, you would have understood that we have got data of weight, height, and age of 10 healthy people. That is the sample. And if I want to see again, I have selected all three, gone for right click, open as group. You'll find that that is also available. You want to have a look, you can have. Groups is not important, so we have keyed in the data. You want some graph and all, that can also be made. Let's say you want to have some, it's very elementary operation of use. So as you find that graph is there, let's go for basics, no complication as of now. So likewise, many operations can be done. You know, these are the 10 observations there. Simple chart is there. I want to have some descriptive statistics. Descriptive, I'll explain. Let's say you want height and weight. So you will have all these data. When I say descriptive, it tries to describe the variable height. So you have got mean, height, median, a couple of things somebody must have explained to you in your statistics course. Standard deviation, the degree of variability of the height, and similarly degree of variability of weight. Somebody would explain to you skewness and kurtosis, that is the measures of shape. Zargbera test. This is one test. You will understand these tests gradually. These are the tests for stationarity. Data should be stationarity, especially when we are using the parametric test. These terminologies you will start understanding quickly. Point here is we have started the application of eViews. Again, I'm deleting it, not required. We have keyed in the data in eViews. And when we meet next time, we'll be starting the regression analysis. I'm just starting the things today. So any question? Is it okay for all of you? You have understood how to enter the data in eViews? Yeah, please.
Sir, can you please show us again how to enter a extra row, the header row, when we are inputting data?
No shoes, no shoes, no shoes. Any other question? None. So let me delete it. I have selected what I have entered. I have given a delete yes to all, finish. We are again back to the square one where we started. Went for work file we have created. So I have to enter the data, go to quick, empty group. So like this was there last time. And as I've said that you want to give the name of the variable. So just click here, nothing else, nothing very great here. Just click here, take the cursor one step ahead, that's it. And go there, copy, paste, Control V, Control C, Control V, nothing else. Is it okay?
Yes, sir.
Close it, delete the group, because once you enter, it is saved automatically in the work file. The group can be deleted. As you have seen again, you want to see them. Open as group, and here it is. Done?
Yes, sir.
So I'm not saving, yes, closing eViews, starting Stata. This is Stata. I'm using Stata 15. Now eViews 12 is there, I'm using 11. Stata 16 is there in the market, I'm using 15. We have licensed softwares at our campus. When you come, you'll be able to use it straight away in the lab. Has got access to all these. You will be able to have the access to both the softwares in the lab. So I'm using Stata 15. Which version usually you have got 15, or what version usually you have? Vanchita might have helped you. Yeah, Vanchita, what version we are using, all of you?
16.
16, great. So you are one step ahead.
The Mac, people who own Mac are using SATA 14, I think.
Okay.
The others might be using the Windows.
No issues. Perfectly all right. So when you are using 16, probably some features might be more advanced to you. And if there is any discrepancy, just raise your hand. I'll help you. I mean, it's not today, later on also. Whenever you find any discrepancy, just raise your hand or give me some information. I'll try to solve the problem. I think yesterday somebody told me, Mudula, that Vanchita, I think problem is solved for Mac.
So I'm trying, like there might be some issues with some people. I'll
Okay.
try to sort it out. I have downloaded the file for Mac and I've shared it, but there might be issues still.
You
I'll
take
try to
Mudula's
sort it
help
out.
and his help. Both are my students. I mean, they
Yes.
are PhD students or somebody has done the internship. So you can use them liberally, no problem.
Yes, sir, I'm in touch with them.
No, she informed me, right, that everything is there.
Yes, sir.
So coming to Stata, as we open it, let me again open it. So this will come slightly complicated because here you have to enter the command and all, but we will confine ourselves to only that portion which is relevant, and gradually you will become comfortable with the software. Then you will be able to use all the features. So again, today we are doing only simple thing. We are entering the data in the software. So there are, again, as I said in eViews, many ways by which you can enter the data in Stata as well. I'll follow what I have found easiest so that you do not have complication. So when I say this, you have to first of all develop the Excel file like this. First row in Excel should have the name of variables and no gap, like weight of or weight of people, nothing like that. You have to have simplest possible name in continuation, the way you are finding SN, WT, and preferably you have in the short form, not the capital letter. Small letters will always help, so that when you enter, so you know that you have to type it, so you know that, because the case sensitive commands are there in Stata, so it would be good if you are using one pattern. So I would suggest that you use the small letters only, not the capital ones. So first row should go for this, the name of the variable, and second row onwards you can have data. You can have 1,000, 2,000, whatever number of data you have. That's not a problem. So, but this should be the pattern. First row with the simplest possible name of the variable, and second row onwards you have all the data. So this type of Excel you can keep ready whenever you want to enter data in Stata. Go to File. You will find one option, Import. And first option is there for the Excel spreadsheet import. Go there. It will ask for the browse option. So wherever you have got the data, I had the data. So wherever I have kept the data, I have just selected fitness plus data. I open it. Before going for OK, just do one more trick. Import first row as variable name. I'll show this whole thing again. So here it is. These are two icons. Use the right one. You will be having the look the way we had the look on eViews. We are having the look. We have got all the data. Right now SN is also coming because the whole Excel file has been read by Stata. So it is like that. Go back. I'll show you again. File, import, Excel spreadsheet. Browse wherever you have your data, just select it, open it, and don't forget to select this import first as variable name. Okay, it will ask for whether the previous data you want to save. I said you want to continue and lose, yes. Here it is. You want to see, I usually go for sum option, summary option, but short form also works. Sum in the command window, I'm typing sum so that I understand what I have got in my in the file which I have entered. What are the elementary information is available of that variable, of those variables. So these are the variables I have entered, and these are elementary statistics like mean, standard deviation, minimum, maxima, a couple of things. So again, you can cross check whether all the data has been entered in Stata correctly or not. All the variables, 10 observations. You remember we have got 10 observations only. So you can be assured by running the this command, sum command, display command, many other commands. But to start with, sum is okay. You have got 10 observations for all the data, all the variable, and then mean, all these things are available. Here also you can go for graphics and all. I'm not going into that. So this is the elementary discussion. I'll show you one more thing on Excel. I hope Stata is clear to everyone.
Yes, sir.
Done.
Yes, sir.
Coming to Excel, in Excel, there is a data option. I'm using Office 2016. Now 2019 also is available in the market. We have also got it. Probably I have to get it loaded. So this is the these are the options which come. I have activated one option of data analysis. If I click it, I'll get these options. If you do not have this option active, then the suggestion is if you have original version, then that would not be any problem. Simply go to option. I'll show you again. File, option, add-ins, and then Excel add-ins are there. Go, and there is just because I have already loaded it. So if it is not ticked in your case, then you can tick it or run it if you have original version. The cracked file or the main file, the application file, I mean the software file, then you will be able to get it run, and you will find that this option will come in the on the data screen on Excel. So we will be using all these three options. We'll be using Excel, we'll be using Stata, we'll be using eViews. As the case may be, we'll look for where the more comfort is there. Accordingly, we'll be applying the data analysis skills. Or we'll be learning things. Now I'll come back to the caselet. Look at the problem. When we say that develop a model, is it okay? We are good to go. Shall we move ahead with the discussion of caselet?
Sure, sir.
Yes, sir.
So this is the caselet. If you have gone through, you would have understood that we are interested in making a model between weight as a dependent variable. Dependent means we are interested in weight. We want a model that how to know the appropriate weight if person is of a given height and given age. So that is the model which we are interested right now to build, as you are finding in the first question. If I talk about the possible solution to the problem, then it is very simple to say that the solution to the problem is weight can be equal to, let's say I'm saying some constant alpha plus another constant. Please understand this is variable, not constant. And another constant we are having the just because we have two variable which is going to be dependent upon weight, so I'll call it beta 1, and I have got height plus beta 2, and let's say I'm calling it age. And as you are as we were discussing when we were talking about modeling, we said that practically there is a, let me put it epsilon. Yeah, this is epsilon. So right now in this is also variable, this is also variable, this is variable, obviously this is also not constant, and it is random. Means when you run a model, it is randomized. These are variable again, these are variable again, and these things are nothing but constants. So look at what is happening. This is my model to solve the problem. I'm interested in having something, I'm interested in having a model where my weight will be, I'm interested in knowing the weight. And I'm saying that weight should be dependent upon height and age. Suppose somebody else is interested in doing it and he says, no, height and age are not sufficient, rather have gender also, rather have what type of work the person does, whether he's working or not working, whether he's in business or he's self-employed, whether his habits are sedentary. The point here is that many such variables can also be added. But just because I am doing it, so I said, no, I'm interested in studying this problem with the help of only these variables. So this is my version of the model. And as I was discussing when I was talking about econometric model, next step is obviously to pull out data. Data is here. So now the question is, what is so special? Why at all we are, it is very simple. If I want, let's say I want to solve this problem, I can go for this, even I'll give you a much more simpler thing. So if I have to estimate, this is a model. This is a model which is theoretically present. But as I say that I am interested in solving this with the help of data, so what happened? I will be having something like this. Weight is there, which is equal to alpha. This is the concept. All the healthy people are part of this concept. But when we actually want to model it, then we do not have population. We do not have all the people which are relevant for this situation healthy. Suppose I say that the population for this model is all the healthy people. But I do not have access to data, or I do not have access to all the people, those who are healthy. Even if, let's say, I talk about India or Pune for that matter, I do not have access to all the people. So I am going to use not the population, but rather a sample. So when I use a sample to build a model, this is population model. Population model is a utopia. It can never be achieved practically. Rather, what we achieve is a model which is based upon a sample. So when we run a sample-based model, then we get estimated value. We don't get alpha straight away. We won't get alpha, rather we'll get the estimated value of alpha. So when I say estimated value of alpha, I'll be getting, it means that estimated value of alpha will be shown with the help of one cap. So this will be shown with the help of a cap above alpha, cap. And cap signifies that we are talking about estimated value of alpha. So this is the original value of alpha, which can never be practically calculated. This can be calculated just because this alpha, what alpha cap tries to do, alpha cap tries to become as close as possible to alpha. But alpha cap is not alpha. So let me complete the sampling model. I call it sample regression function. If I call it population model, then this is the sample model. Let me complete this. Another value, estimated value of beta. And here I'm having beta 1. I'll have height plus estimated value of beta 2 with age. And remember, when we go for estimated value, then we do not have this epsilon, because now we are talking about estimated. So this weight is also different from the actual weight. I'll give you straight, slightly simple idea so that you don't have any confusion. This is the original sample data. This is the estimated value of weight, and there has to be a difference. And again, this error comes here. We call error with the help of u. I can here also, instead of if I continue today, let's continue with epsilon here. So epsilon is the error between the data used and the estimated value. Suppose I key in the height and age of the data available to me, I'll be getting some value which will be estimated value of weight. Estimated value will not be same which are the original values. There will be a difference. That difference is the epsilon. And just because again I'm not having the weight value, but the weight value of the population, rather I have weight value of the sample, so I'll say that this is not epsilon, rather this is epsilon cap. I've invested this much time here just to make you understand that if I want to know this model, if I'm interested in this model, then what is happening in this model, what I have estimated practically? I have estimated alpha, I have estimated beta 1, I have estimated beta 2, that's it. Weight is going to be the estimated value of the variable. Height will be variable, which will be like that, age. So let me give you actual data. If I go back to Excel, I can derive it. I'm going to apply Excel regression. Okay. I will give the, you are finding input Y range. Y is dependent variable, the variable for which we are interested in studying. So I have just selected this portion. A range of independent variable. The variable which is going to have its impact on the dependent variable are known as X or independent variable. Right now, these are height and age. I've just selected, and let other things be default setting on Excel. These are the outputs I'm getting. Right now, I'm just telling you, this is if I try to give you in the terms of variables, then here we have got age. So what we are having, this is intercept, I can call it alpha. Now look at here, what we have got, these three things. So let me put it here. So I can say, if I talk about my model, I can talk about my model. My model is weight is equal to this model, this yellow portion, yellow highlighted portion. I'm just going to write, but right now I'll be writing the actual values of estimated values of alpha cap, beta 1 cap, and beta 2 cap. So these are the values: minus 39.89, minus 39.89, plus 0.73. I'm rounding it off to 2 decimal points. 73 and minus 0.26, minus 0.26 h. So if you look at what I have done, I have estimated this model. Yeah. So this model, this yellow shaded model, would have been estimated. Now what I have done here, if you look at the differences here, that alpha cap value, which is here, yeah, it has been estimated. Beta 1 value has been estimated this, and beta 2 value would have been estimated this. The point here I'm trying to highlight is estimating these values is really very easy. Right now you have seen it took hardly 5-10 seconds, or let's say 2-3 minutes to calculate these values. But the interpretation of this is going to be slightly difficult. If I just show you one of the templates, one of the Excel file which I have shared in the template, I don't know, just I'll come to the discussion part first. Look at it. Is it visible to all of you? Look at it.
Yes, sir.
When we talk about output, then the very same model which I have just made here. In this model, if you look at, these are known as coefficients. These three, alpha cap, beta 1 cap, beta 2 cap. So what happened, I am using this model to talk about what would be the appropriate weight. If I put it more accurately, I should show it by cap. So I can say that with the help of this model, I can talk about what would be the appropriate weight, provided I know the height and age of the people. So this relationship I'm talking about for the healthy people. But to make this or to build this model, I have used only 10 people. It means I can say that the model is for the population. This is, suppose I say this is the population. All the, let's say I'm talking about people of Pune. And to make the model, I have just used a part of this. So I have not taken data from all the population, people of all the population, from the whole population, or I have taken data from a sample of just 10. So what I'm saying, that my model is This model is based upon the data generated by 10 people. But I want to use this model for the population. See the problem. Is it so easy that data generated from 10 people can straight away be used for population, or there are some limitations? Or if you try to understand from here, as I was saying, that alpha cap tries to be alpha, beta or j, let me call it beta caps are going to trying to be beta j. If you look at this is the original model, which we can never estimate because we do not have access to data of population, all the people of population. What we have access to, we have access to data of sample, and that's why we don't calculate directly alphas, rather we calculate alpha cap, and we don't calculate beta, rather we calculate beta caps. But this, how far beta cap can be equal to or very close to be equal to beta, or alpha cap is going to be very close to actual alpha, that depends. And that's why we have got this discussion of output. So first set, the whole discussion of model or econometric models based upon 5 points, 5 heads. I have tried to give you in the template form so that the ease of learning is always there with you. So first step, we discuss coefficient analysis. The way I have told, whether alpha cap is close to alpha, beta cap is close to beta, how far it is true, how far it is not true, we discuss in the first head of output analysis. And if I show to you, I have some tables ready. So this table and one more table, descriptive statistics table, these two tables. So I have given you two tables, table 1 and table 2. These are the two tables which we are supposed to fill with the help of data analysis. When we run the model, I have not entered all the data that I'll be doing in next session. Right now, I'm trying to highlight the importance or relevance of the whole understanding of output. Next time I'll do the whole analysis. I'll I'll write all the data and then I'll explain. So these two tables can be filled with the help of data analysis, and then using these 5 steps, I can explain to the output. So right now I'm just trying to highlight what are the explanation. So as I'm showing, first explanation is about the coefficients. So these are alpha, beta, these are known as coefficients of the regression model. Second is model interpretation. Second discussion is this whole model. We have to discuss whether this model is good, bad. Right now, I'm not talking about only the coefficients. Coefficient discussion is done in the first step. Now I'm talking about the whole model. So now we have to have a discussion of the holistic model, complete model as it is. So we have to talk about whether this model is good, bad. If it is not great, then up to what extent it is good, means in terms of percentage. And then we have also we have to talk about what are the possible errors in this model. Likewise, we have to second point or second head of discussion of the output is we talk about the whole model, not the coefficient. Third, we move to the diagnostic testing. As I was showing to you, this is not a child's play. I mean, this application of alpha cap is close to alpha is based upon certain rules. And if I just try to give to you some understanding, then that method is known as OLS, optimum least square method we have used. Optimum least square. Optimum least square methods are based upon certain assumptions. So there are set of assumptions which are many in number. So right now, I want you to only concentrate, or in this discussion, one thing also I would like to share with you that when we talk about application of financial econometrics, we'll confine ourselves to more application part, less of theory, so that we are more towards applying the concept than learning the theory of the concept. So that's why I'll be only sharing with you 3 important assumptions of OLS. Let me repeat this. OLS is the science which is used to ensure that estimated coefficient of a regression model is closer to the actual coefficient of the population. Because when we are saying we want to know the association of weight with height and age, so when we are saying then we are interested in whole population. We want to understand that if all the healthy people are there, then how healthy people's weight is related to their height and age. But just because we do not have access to population data, so we have used sample data and we have got alpha cap and beta cap. So the limitation, the rules which are applied is OLS, and OLS is based upon certain assumptions. So accuracy of this transmission from alpha cap to alpha, beta cap to beta depends on certain rules. And the important among them are three, which we'll be talking. First is we'll be talking about heteroscedasticity. We'll be talking about multicollinearity, and we'll be talking about autocorrelation. Only three assumptions we'll be talking. If I show to you the output, these three, practically these two, and in this, when I talk about VIF, this correlation matrix between all the three variables which I have used in this model. So all these three things, autocorrelation, heteroscedasticity, and this VIF and correlation will help me to address the issue of all these assumptions. So I'll be talking about, these are important because unless until you have addressed these issues, you are not sure whether all the assumptions on which OLS was there, OLS has been applied. If unless until these assumptions are holding true, it is not appropriate to say that this application of this regression model can be done. And perfection can never be there. But when you are sharing the model, then you need to share that up to what extent these assumptions are holding true. If they are not holding true, then what are the limitations? So that part should be shared when you are talking about a particular model. So this model cannot be straight away used unless until you have had a discussion on diagnostic testing. We call it diagnostic testing when we talk about how to ensure that the assumptions of OLS are holding true or not. I'll explain in my next session when I actually apply the data. I'll explain what is heteroscedasticity and multicollinearity and autocorrelation. Already I'm running out of time. 12:15 was the time. Let me finish. So coefficient analysis, model interpretation, diagnostic testing, these three things are clear. We are moving to parametric stability. As I was talking about when I build this model, suppose somebody else says that these two are not the good enough variables. There should be 2, 3 more variables. It should not be only two. Means the question is on model specification. This is called specification of the model. I need to test whether the model, the variables used in the model are appropriate or not. The specification of model is correct or not. That is again should be tested. So when we talk about parametric stability, it is nothing but the correct specification of the model. So parametric stability will be tested with the help of reset test. Reset test will be used to have a discussion on the appropriateness or specification of the model. That we'll be doing. And then last is the application part. When you are making a model, as you look at the caselet also, we are talking about prediction. So prediction can be a single value, range. It is much better to talk in terms of range. So how to do this? So the whole discussion of output of any regression model or practically any econometric model is incomplete unless until we would have broadly touched upon these 5 parameters. So I have given you in the form of template so that you do not miss out anything. Coefficient analysis talks about individual coefficients in the regression model, alpha, betas. Model interpretation, the whole model as a whole, discussion should be done. Then diagnostic testing, the estimation of alpha and beta, alpha cap, beta caps are dependent upon certain rules. The rule, applied rule here is optimum least square, and that rule is based upon certain assumptions. So when we actually want to use the model, we should check whether the assumptions are holding true. The important assumptions, if I say so, are holding true or not. That is the next thing. And then whether the model specification, the number of variables which I use in the model, they are enough, sufficient or not. That is done with the help of parametric stability test, and eventually the application with that is done with the help of calculating the forecast value or forecast range. With this, we have come to an end for today's discussion. This is what I have planned. You are free to ask or react on anything. Yeah, you can put questions. You have got one Google Sheet also. There also you can have questions. I can take up those questions when I meet next time. You are free to react. You are free to ask. I have finished my part. Whatever I thought I have discussed with you.
Sir,
Yeah, please go ahead.
so you said that we do the variable specification test at a fourth stage. So,
Okay.
like, uh, shouldn't we check before that those variables are uh, good enough to check, or like how should we
Actually,
go for the variables?
what is there now? When you make a model, then I'm not saying that these all five things should be done in this sequence only. It is your choice. It is just suggestive template. You want to test, you have doubt. You know what happened when you are doing something and you are in doubt. Then you obviously will check for something where you have more doubt. You have doubt, actually model comes from theory. When I take up anything, I want to know how weight is going to be dependent upon determinants, the variables. So, with my own understanding, somebody else would have already done the study. With my own understanding, I'm relatively sure that these are the possible good variables which I should take. So, I'm having lesser doubt on that part. So that's why I have just put it the sequence of fourth sequence. But suppose you are in doubt that your specification is not correct. First, you check the specification. As you run the model, first thing you may check specification. There's nothing like sequence. So wherever you have doubt, you test that thing first. No problem, no issues. Suggestive template.
Okay, sir.
There's nothing like. I mean, even econometric model steps are all not cast on the stones. Nothing like that. Just suggestive steps. Feel free. I'll appreciate if you have a question. You ask it.
Sir, I have a query.
Yeah.
So the model which we used, in that we had two variables, height and age, and we were using
Correct.
that to estimate the weight. And you also added an epsilon variable, which you said was random. So my question is that if we keep adding more variables, maybe let's
Okay.
say 5 variables, 10 variables, then
Okay.
won't the value of epsilon reduce as the more and more variables keep getting added?
Very good question. What happened? There are two things when we make any model. When we say model, why? Then you will find that this part y by x, I'm just using slightly notations. This part is observed part, means I have got data of x. With the help of that, I have made this model. I can put it this way, y cap, and this portion is unobserved. So whatever variable or variables I have not used, that goes here. Unobserved part is known as u or epsilon for that matter. So what is happening, there is a rule of parsimony. It is said that when you are trying to address a problem, it is not very advisable to have too many variables. Rather, you should be more discreet in terms of selecting the most appropriate variable and try to keep it as less as possible. So there's nothing wrong in adding, but every time when you add, look at the model. What is happening when we are adding more than one variable for that matter? So this variable, when I add ht, and when I add age, what is happening? These are sample data because population data is not available. So every time I'm using the sample data, I'm adding some error to the system because as I've told you, I'm using sample to build this model. So first of all, I'm having some problem that I do not have population data. So all the way I'm using the sample data. So it means the point here is that every variable will have some error compromise because all the variables, all the data of all the elements are not available. I have only sample. So if you add more number of variables, so those errors will get added up. So keeping these two things in mind, the law of parsimony, that we try to keep model as simple as possible, and we avoid the error of using the sample data. These two things are right or enough to explain your answer, that we can add as many as variables possible. There's no problem in that. Software will give you results all the time, but that will add two things. First, the law of parsimony will be violated. You will be having very complicated model. And second, as you add more number of variables, more number of errors you will be estimating, will be putting in the system. So which is again not very advisable. I hope I have answered your question. You can react to it.
So basically, the gains from reducing epsilon will be offset by the sampling error. Basically, you're saying.
I can say, or better is, when we are testing the model, as I told you, we have got Ramsey test, reset test. Reset test will tell you whether the specification is right or not. If this reset test gives you accurate idea that your specification is good enough, then I don't think so that it is desirable unless until theory supports. What is theory? I'm an expert of weight. I'm a healthcare specialist. I've been studying, talking, dealing with these issues. So I'm a better judge to decide that how many independent variables may be impacting the weight variable. So if I have got a very pressing requirement, no, I have to have 4, 5, or 6 variables, and my theory, my understanding says no, it should be, then definitely I should have. But if my theory, my understanding and the previous studies also say that 3 or 4 are good enough, then I should stick to it. Unless until you have some pressing requirement to have more number of variables, it is not desirable to add more number of variables. As we go through the model interpretation also, you will understand whether the model is appropriate. You will be taking the model specification. These are enough to understand whether the used model is good or not. Yeah.
Okay, understood. Thank you, sir.
You are free. I mean, still you think you have any doubt, you can get back to me, no problem. My number, you have my mail IDs with you, all of you?
So I have a doubt
Yes, sir.
actually.
Just a minute, I'll get back to you, Nikita.
Yeah.
My number you can write down. You want to send me any message you can. 9.
So I'll share your contact.
Right. This number you can use. This is on WhatsApp also. Calling may not help because I don't. I'll take the call, but I'll not answer your question. So first, send me a message. If I require to talk to you, I'll talk to you. And bother me at any moment of time. That's not a problem. But send me a message. Don't call. I repeat, I'll take your call, but I'll not entertain your query. Right? Yeah. Somebody had the question. Nikita, yeah, please go ahead.
Yes, sir. Actually, the thing is, I wasn't able to grasp all of it in one go. So, will you be also explaining the same topic in the next lecture as well?
You are talking about regression analysis part, application of
Yes.
fitness cost caselet. Yeah, that is again going to be explained.
All right, sir.
So, but just give me the idea. What part did you not understand? The whole of it.
Towards no. So towards the end, the application of epsilon and
We'll be revisiting them, no problem. You will be shared. Karkar will share with you the video. This what
all
we
right,
have discussed, so you can revisit. And you want to, will be obviously explaining. I will be explaining with the actual data. I'll be running the model. I will fill this table 2, table 1, and I'll again explain these two things. I mean, all
all
the
right,
things, whatever I have discussed, all the output part. So there are two options. Either you wait and let me explain this in the next class. I'll explain the whole thing in the next class. Then you can ask question. Or if you are still not clear, then after that session, you can get back to me. I'll try to
all
help
right.
you out. Is that okay?
So, just as a summary, the entire model is based on the regression theory, is it? Or can we also perform other analysis with this?
Actually, the solution depends on the problem. It is not, I have a solution, so I look for a problem where I can use the solution. It's not like that. Rather, it
Okay.
is the other way around. I have a problem. Looking at the problem, I decide. Just because suppose I claim that I have a little bit understanding of data analytics, so I look at the problem. As per the nature of the problem, I will decide whether I should go for a particular application or not. So my decision to use regression analysis is dependent upon the nature of problem. So this problem is a perfect case for the application of regression analysis. That's why I applied this. So as we move on in the course, you will find that we'll be having different types of situations. If I show you a quick discussion, there will be situation where I'll be using co-integration, error correction model. So these are different types of models which I'll be using. But why I'm using, because the situation is going to demand that I should use co-integration, I should use error correction model. Similarly, all these types of models. So solution depends on the nature of the problem.
All right. All right. Thank you, sir.
Done. I'm open to more questions. I have no problem. I appreciate if you ask. ठीक है, so we'll wind up. Is it okay? Shall
Thank
we
you, sir.
close?
Yes, sir.
ठीक है.
Yes, sir.
Okay, well, ठीक है. We'll meet next
Thank you
time.
so much,
Thank
sir.
you. Okay.
Thank
Thank you, sir.